What's up, everybody? It is Ashley Gunther, the lone wolf owner of Cap Funding. And today I'm going to go over payment processing and why it matters more than you know. So let's dive into it. What are the most popular payment processors? Now, for the majority of newer businesses, hustlers, and startups, these typically tend to be the five most popular options. You have PayPal, Stripe, and Square, and you have Wave and Clover. I'm not going to dive into each of these price points, but as you can see, each one has its own price point. And in fact, Stripe just recently raised their payment fees 0.50 cents. So when you sign up, PayPal, Stripe, Square, Wave, and Clover, they make it quite simple. You go to their website, you enter a few pieces of information, your name, your EIN, and you set it up, and it's done within a few minutes. And now you can accept payments. But as you can see, you're going to pay anywhere between a 2.3 to a 3.45% per transaction. Now, expect to pay around 4%. Now, I understand that it was between 2.3 and 3.49, right? But there are other fees that are hidden when you process. It could be an interchange fee. It could be a card not present fee. Maybe you're looking to be funded the next day like Stripe. Stripe will charge you an extra 1% for next day funding, right? So the rule that we use in financing is you're expected to pay around 4%. And honestly, some clients are paying up to 7 and don't know it. So if you're paying around 4%, that means for every $10,000 month, you're paying out $4,000 per year in payment processing fees. Now look at what it looks like at 100,000. If you are making $100,000 a month, that means every year you're paying out $48,000 a year in fees. That's a full-time manager position. Now, why am I talking about fees so much? Well, you may not realize it, but you do not have to pay payment processing fees. This is a common misconception. And there is a newer program that's been around about 4 or 5 years that allows you to pass the payment on to your customer legally. But I'll dive into that later. So what can you expect from these particular companies? Like I said, when you sign up for PayPal, Stripe, Square, there are going to be certain things, maybe you can call them negatives or consequences to utilizing them, right? Well, first of all, minimum paperwork to approve your account. That's great. But you're going to have daily and monthly limits. You're going to have a hold period. You're going to have a 90-day assessment period. Customers can easily file chargebacks. If you've used PayPal or Stripe for any length of time, and if you've used it for multiple businesses, at some point you've probably gotten an illegal chargeback. Illegal chargebacks are terrible. There are quick transfers and payment gateways. A payment gateway is how you accept your payments online. With PayPal, you get a MasterCard cash back card. It can be amazing. And the accounting is made a little easier. And something that I didn't put on here is PayPal, Stripe, and Square, they do offer working capital based on the income. So, what are the most popular ways to avoid fees? Because a lot of you aren't wanting to pay 4% or more. So, oftentimes, a business owner will go to these type of payments in order to avoid fees. So they'll use Cash App, Venmo. They'll ask you to send PayPal friends and family. They'll accept cash or they'll do Zelle. Okay. This is what you're doing to attempt to avoid fees. But what you don't realize is when you accept these forms of payment, number one, you're actually increasing your internal risk score, which decreases your chances of funding. It decreases your chances of a stable merchant processor, and it actually can put your bank account at risk for being frozen as well. The other part is you may be illegally charging extra fees. Surcharges, that's that extra fee that you add in order to compensate for fees, are illegal in 33 states. So oftentimes, as a new business owner, you are illegally charging or actually doing illegal methods within your banking system and you don't know it. And when you do those things, you leave yourself open to your accounts being frozen and even your bank account being affected. These are also very amateurish ways to get your payments. If you've seen any threads regarding Venmo, people can put the craziest comments and all of your customers see. I actually personally know people that have lost sales because they've taken payments this way. So how does accepting payments this way hurt? And I've already mentioned this some, right? But here's a few others. If you are taking those payments and you're putting them directly into your personal account and not your business account, it does not count as business revenue. I know and knew way too many people that are taking their PayPal or their Stripe money and they're putting it right into their personal account. They're taking that Cash App, the Venmo, the Zelle, and it's going into their personal account. Any funding that goes into your personal account will not be counted as business income. Now, like I said before, if it goes into your business account, it's going to increase your internal risk score, which makes it harder for you to get funding. Banks won't consider your business healthy as well because you're accepting so many different payments over such an aggressive, far apart land. Like accepting 8 different ways of payment is not healthy for your business. And investors won't take your business seriously. If you're looking to sell your business, these type of payments are not going to help you. The investor's going to think that you're not serious, and you're going to lose out on a lot more opportunity than you realize. Also, your business is likely restricted. Now, we all know the majority of us do not read the fine print. We don't read the terms and conditions, etc. But if you go to Stripe or PayPal or even Square, you're going to see that they have a long list of restricted businesses. And I've listed them here. Go ahead and hit that pause button and go through it. But just to name a few, first of all, any type of digital products, which I didn't directly name on here, if you're selling a digital product, a coaching program, anything that's not a physical good, these processors do not like you. It is meant for physical goods to be shared. The reason being is people can prove that they've received something. The reason why these processors have so many different laws and regulations is to protect the client. Anyone can open up a business. Anybody can open a website. Anyone can say they're selling something for $1,000 and they can take those $1,000, but they have to deliver the goods. And if they don't, things like your payment processor is there to protect you. So if you're looking at this list, you are most likely in a business that PayPal, Stripe, Square, and the others do not like. And just to mention a few, like lending, my company, they don't like my company, any type of digital product. Look at the buy now, pay later. What's crazy is all these buy now, pay later are advertised with Stripe and PayPal. But oftentimes, if you're accepting a buy now, pay later, you are now in violation of your payment processor. So when people say, oh, I got my account shut down for no reason, it's actually a multitude of reasons. And I'll go into that a little later. So what do you get with a real merchant processor? First of all, a real merchant processor is what protects you. Number one, it's going to lower your internal risk for funding. So when you're using a real merchant processor, okay, it's going to help with your funding. You will get stronger funding offers with a merchant processor. It stabilizes your cash flow. When you work with a company like us, you get a real human rep in the US, not an 800 number, not hoping to get somebody that understands. And by the way, when you call those payment processors, if you don't like the answer you're given, if you keep calling, eventually someone will give you a different answer. That's because these are hourly paid reps. They care about your business as much as a total stranger. They don't care. They're paid hourly to do a job. We have chargeback attorneys on payroll. What does that mean? That means when you're getting hit with those illegal chargebacks, we're able to protect you. First and foremost, working with a merchant processor, we make sure that you have the right pieces of paper and documents and things in place to not be a victim of illegal chargebacks, unlike PayPal, Stripe, Square, and others, okay? Accounting and bookkeeping as well as taxes take less time. Your bookkeeper will love you when you get a merchant account. You won't be paying your bookkeeper and your accountant as much because now they have a line by line in order to do your paperwork. So you'll actually save money in many ways by having a real merchant processor. It also protects you from fraud and bad payments. I want you to imagine that you got a bad payment on PayPal. Let's pretend it's $10,000 and it's fraud. They're going to take that money out of your bank account. When you're working with a real merchant processor, we're going to fight and we're going to make sure that you don't lose out on that money. And next, you are paying thousands of dollars in fees with PayPal, Stripe, Square, and the others. With a real merchant processor and working with a company like us, you can actually tap into something called cash discount, where you pay 0% in fees. You pay a small monthly maintenance fee. It could be as low as $25 a month up to $50 a month. And all of those credit card processing fees get passed along to your customer. We see cafes doing it. We see your local government uses it. Your local government has been doing cash discount for years when it comes to paying your water bill. We're seeing more and more high ticket people passing along the fee. This is now such a popular program because of COVID and the fact that people realized they no longer have to pay the fee. When should you use a payment processor? So I have spoken often in this video about all the ways payment processors are not the greatest, but there is a time and place to utilize the payment processor, and there's a time and a place to fire them and move on, right? So if you're a brand new business and you're taking payments under $10,000, get started with a payment processor. Start with PayPal, start with Stripe. Okay. If you've never taken payments before, if you don't have a budget, or if you have really bad credit, this is where you start. Okay. And what you want to do is you want to use that payment processor for 3 months. You want to get a history of taking payments for that 3 months. Yes, you'll have a hold period. Yes, things will be tight. No, you won't be able to draw from it right away, but it's a sacrifice that you make at the beginning of your business in order to reap further and better later on. They can also help you, like I said, with working capital. If you start making more than 10K a month consistently in your business, you will be extended a revenue-based type loan product where they can offer you $5, $10, $15,000, and they will take out a small payment. PayPal does it a weekly. I have used it many years ago back in my e-commerce. It can be a great tool to utilize when you have bad credit, when you're just starting out. When should you get a merchant processor? Once you've been open 3 months, once you started taking $10,000 plus a month, once you have that business bank account, okay? If you're taking payments in person, if you're actually selling a real product, and if you need systems that are going to keep track of your inventory, that are going to have a time clock. Maybe you want to do a subscription service. You have a gift card program. You have other things going on, and you need the software within the system. A merchant account is going to be far more viable and more scalable than what you're using. Now, how to get a merchant account? Like I said, once you have those 3 months business bank statements, you have 3 months history of a payment processor, you have your LLC or your corporation, you have a legit website, you can reach out to us at thelonewolf.co or Ashley at thelonewolf.co, or visit us on social media, The Lone Wolf USA, and you can request us to help you get set up with your merchant account. Why choose us? Because we don't just sell 1 or 2 things. When you go to PayPal, you get PayPal offers. When you go to Stripe, you get Stripe. But when you come to us, we're evaluating your particular situation, your customers, and your goals, and your scalability. If you're a high ticket, a coach or consultant, your biggest concern is scalability, and PayPal and Stripe does not give that to you. So if you're looking for scalability, we are the ones that can help you with that. Now, finally, like I said before, you can utilize payment processing. You can utilize it to get financing. And that is not an issue. When you're first starting out, sometimes you have to make certain sacrifices, right? But once you bust through that 3 month, once you bust through that $10,000 a month, and you get to 6 months and you're doing more than 10K consistently, you want to protect yourself. And if you are planning on any type of launch, so let me end with this. When you think that your PayPal or your Stripe or whatever account was frozen for no reason at all, I'm going to explain to you why. Okay. You are not being frozen for no reason at all. These are common reasons your account gets frozen. Number 1, you have opened up a brand new product, you just did a launch, and you've rapidly received a number of new payments. That can trigger an audit. It can trigger the fraud team, and they will freeze your account. Number 2, chargebacks, whether they're illegal or legitimate. If you get too many, if your chargeback percentage goes up over a certain percent, your account will be frozen. Next, let's say you do any type of changes to your website or social medias. If you change your website, let's say you add a product, let's say you add one CBD product, you're now in violation of all of your processors. Let's say you decide to add a new product like a finance product or a digital product. You can now be violating your payment processor because your payment processor only likes to process certain types of goods and services. Another one, if you change IP addresses or if you start receiving payments from the same IP address that you operate under, that can be considered the act of money laundering and illegal banking activity. That can also get your account shut down. Any type of dramatic change, if you go from making $10 to $100,000, something is going to trigger it. If you go from selling $1,000 products and now you're making $10,000, it's going to trigger it. When you have a merchant account, it's different. And you're also working with a rep that's going to make sure that the processes and the accounts are going smoothly and that the company or the processor understands that things are changing. So these are many of the reasons why you got shut down and you feel like it's for no reason. PayPal recently said that they're going to start fining people for saying anything that they feel like is against whatever. They backtracked, but honestly, in these contracts, there are plenty of examples and them saying, hey, if you do this, this, and this, we will fine you. These companies have the right to fine you. These companies have the right to shut you down at any time because there are rules and regulations they have to follow. So I hope this video has helped. If you have any questions, go ahead and drop them in the comments below. Hit that like, hit that share button, and check out my other videos.